Semiconductor industry is exploding right now, and while everyone's chasing NVIDIA and AMD, I found 3 penny stocks, under $4, that are positioning themselves in some of the hottest sectors in tech. One of them just secured deals that could generate tens of millions in recurring revenue. Another is working on technology that could revolutionize cybersecurity. And the third has a $7 billion backlog. Stick around, because what I'm about to show you could be a game changer. What's up, penny stock hunters? If you're new here, welcome to the channel where we dig deep into undervalued opportunities that Wall Street isn't talking about yet. Today, we're diving into the semiconductor space, but we're not looking at the big names. We're hunting for those hidden gems trading under $4 that could potentially explode as the chip shortage continues and demand skyrockets for AI, electric vehicles, and autonomous driving tech. Now, before we jump in, hit that subscribe button and smash the like if you want more penny stock content like this. And remember, this is not financial advice, just my research and opinions. Always do your own due diligence before investing a single dollar. All right, let's get into it. First, let's talk about why semiconductors right now. The global chip market is projected to hit over $1 trillion in the next few years. We're seeing massive demand from multiple sectors that's just insane. AI is absolutely hungry for chips. Every chatbot, every image generator, every AI application needs serious processing power. Electric vehicles need semiconductors for everything from battery management to autonomous driving systems. 5G infrastructure is rolling out globally, and every tower, every device needs specialized chips. And IoT devices, the Internet of Things, is multiplying like crazy. Your smart fridge, your doorbell camera, your fitness tracker, they all need semiconductors. But here's the thing that most retail investors miss. While everyone's piling into the mega caps like NVIDIA, AMD, Intel, and Taiwan Semiconductor, there are smaller players positioned in very specific niches that could see explosive growth. These are the companies developing the specialized chips that enable the next generation of technology. They're not trying to compete with the giants on general-purpose chips. Instead, they're focusing on specific applications where they can become the dominant player. And right now, 3 of them are trading at rock-bottom prices that honestly seem ridiculous when you look at their potential. So let's break down each stock, what they do, why they could pop, and most importantly, the risks you need to know about, because I'm not here to blow smoke. Stock number 1 is currently trading around $1.50 to $1.75. This is a company specializing in high-performance connectivity solutions, and they're a leader in automotive connectivity chipsets. Now you might be thinking, automotive connectivity? What does that even mean? Let me break it down for you. Modern vehicles, especially electric vehicles and self-driving cars, are basically computers on wheels. They have dozens of sensors, cameras, radar systems, displays, and control units that all need to talk to each other in real time. And I mean real time. When you're going 70 miles per hour and your collision avoidance system detects something, there's zero room for lag or data bottlenecks. Here's what makes this company interesting. They pioneered an industry-standard technology called MIPI-A-POI. Now, I know that sounds like technical jargon, but stay with me because this is important. MIPI-A-POI is basically becoming the new standard for how data moves around inside next-gen vehicles. Think of it like the nervous system for self-driving cars and advanced driver assistance systems. Just like your nervous system instantly transmits signals from your eyes to your brain to your hands when you need to react, this technology allows all the different systems in a car to communicate instantly and reliably. And here's the kicker, it's becoming an industry standard, which means automakers are building their next generation of vehicles around this technology. Now here's where it gets really juicy. They just announced 3 major design wins with leading European automakers. Production starts in 2026, so we're not talking about some pie-in-the-sky future concept. This is happening. And these deals alone are expected to generate over $10 million annually for 5 to 7 years. That's recurring revenue, folks. Once a car manufacturer designs your chip into their vehicle platform, they're buying from you for years because they can't just switch suppliers mid-cycle. That's the beauty of the automotive semiconductor business. Their Q3 revenues hit $17.3 million, and that's their 6th consecutive quarter of growth. 6 quarters in a row of growth. That's not a fluke, that's a trend. They're partnered with big names like Mobileye, which is Intel's autonomous driving division, and Samsung, one of the biggest semiconductor manufacturers in the world. These partnerships give them credibility in manufacturing scale. And get this, analysts are forecasting revenue to grow from $57 million last year to potentially $300 million by 2029. That's a 5x increase. We're talking about a company that could quintuple its revenue in just a few years. The stock has a strong buy rating from analysts with a price target of $3. From $1.50 to $3, that's basically a potential double from current prices. Now, I'm not saying it's going to hit that target tomorrow or even this year, but the upside potential is clearly there according to the people who cover this stock professionally. Now let me talk about the risks, because I'm not going to sugarcoat this. They're still burning cash as they scale up. Growing a semiconductor company requires massive upfront investment in R&D, in manufacturing relationships, and getting your chips designed into products. That takes cash. They're a small player in a competitive space. The automotive semiconductor market has some big established players, and they're all fighting for market share. And automotive production cycles can be unpredictable. We saw during COVID how supply chain disruptions and chip shortages threw everything into chaos. If there's another major disruption, or if their customer automakers face production problems, that impacts them directly. But if they execute on these design wins, if they deliver on those revenue projections, this could be a serious runner. The ticker is VLN, Valens Semiconductor. Stock number 2 is trading in the 250 to 350 range, and this one's playing in a space that most people aren't even thinking about yet: post-quantum cryptography. Now let me explain why this matters, because this is genuinely cutting-edge stuff. Right now, all of our online security, your bank account, your email, government secrets, everything is protected by encryption that's based on mathematical problems that are extremely hard for regular computers to solve. But quantum computers, which are becoming more powerful every year, will eventually be able to break all of that encryption in seconds. I'm talking about literally making all current cybersecurity obsolete overnight. This company designs secure semiconductors, including something called Vault-C secure elements, post-quantum chips, RISC-V chips, and secure ARM platforms. Basically, they're building the chips that will protect our data when quantum computers eventually break all current encryption. They're working on the next generation of cryptography that even quantum computers can't crack. This is the kind of technology that governments and militaries and financial institutions are going to need, not want, but need in the next 5 to 10 years. Now here's what makes their business interesting beyond just the post-quantum angle. They're serving multiple high-value sectors: smart energy, where they're securing smart meters and grid infrastructure; automotive EV charging stations, which need to securely handle payments and data; aerospace, where security is absolutely critical; military telecommunications, which is obviously high security applications; industrial applications; and even luxury goods authentication. High-end brands use their chips to authenticate genuine products and prevent counterfeiting. That's serious diversification. They're not betting everything on one sector or one technology. Analysts have this rated as a strong buy with a $6 price target. From $2.50 or $3 to $6, that's potentially a 2x to 3x return from current levels. But now I need to hit you with the big caveat on this one, and this is important. Their revenue dropped over 63% year over year. 63%. And they're currently unprofitable, with losses actually increasing. So why am I even mentioning this stock? Because this is definitely a high-risk, high-reward speculative play. You're essentially betting that their post-quantum technology and cybersecurity solutions will see massive adoption as the threat landscape evolves, and that they can turn their business around. The market cap is around $374 million. So this is a very small company. For context, that's like a rounding error compared to the big semiconductor companies. But here's the thing about small companies with cutting-edge technology. If post-quantum computing becomes the next major concern for governments and enterprises, and if they can execute on their technology and turn around their revenue decline, this could absolutely explode. The potential is enormous, but so is the risk. This is LAES CLSQ Corp. Definitely the riskiest of the three I'm covering today, but potentially the highest reward if they execute. This is the kind of stock where you need to size your position appropriately and be prepared for volatility. Stock number 3 is trading around $3.40 to just over $4, right at our price limit. This company is laser focused on automotive semiconductors for advanced driver assistance systems, or ADAS, and autonomous driving. If you've bought a car in the last few years, you've probably experienced some of these features. Automatic emergency braking that stops your car if it detects an imminent collision, lane keeping assist that nudges you back. If you drift out of your lane, adaptive cruise control that maintains distance from the car in front of you, blind spot monitoring, parking assist. All of that technology requires sophisticated sensors and chips to work. This company provides the sensors and chips that power collision avoidance, parking assist, lane keeping, and eventually full self-driving features. We're talking ultrasonic sensors for parking and close range detection, radar for medium range detection and speed measurement, cameras for visual recognition and lane detection, and LiDAR integration for high-resolution 3D mapping. All the technology that's making cars smarter and safer. And here's the massive trend they're riding. ADAS is going from a luxury feature to a standard safety feature. Governments around the world are starting to mandate certain ADAS features. The European Union is requiring new cars to have certain safety systems. China is pushing hard for autonomous driving technology. The US is following suit. This isn't optional anymore for automakers. Here's what caught my attention and made me want to cover this stock. They have a $7.1 billion backlog. Let me say that again. $7.1 billion. That's billion with a B. That means automakers have already committed to buying $7 billion worth of their products over the next several years. That's not speculative future business, that's contracted, committed orders. They're expecting revenue growth to exceed 20%, and they're targeting $800 million in sales by 2028. Think about that trajectory. They're scaling up massively to fulfill this demand. They just announced a strategic collaboration with GlobalFoundries to develop advanced semiconductor solutions. GlobalFoundries is one of the world's largest semiconductor foundries. This partnership gives them serious manufacturing credibility and capacity. They're not some tiny startup that might not be able to manufacture at scale. They've got a tier 1 foundry partner that can produce the volumes they need. 4 analysts covering this stock rate. A strong buy with an average price target of $625. That's a 73% upside from current prices, nearly a double if analysts are right. The market cap is about $695 million. So it's larger than the other two, but still very much in small cap territory. The biggest catalyst here is the global push toward autonomous vehicles and ADAS. As these systems become standard in more vehicles, and as regulations require more safety features, this company is positioned to ride that massive wave. Every new car rolling off the assembly line is going to need more and more of these sensors and chips. The total addressable market is growing exponentially. Now let's talk risks, because every stock has them. Automotive cycles can be brutal. When there's an economic downturn, car sales drop, and that impacts their customers and therefore them. Competition from bigger players is real. Companies like Texas Instruments, NXP, Infineon, they're all playing in this space too, and they have deeper pockets. And there's execution risk on that massive backlog. Having $7 billion in orders is amazing, but they actually have to deliver those products on time, on spec, and profitably. If they stumble on execution, if there are quality issues or delays, that could impact their relationships with customers. But if they deliver even half of what they're projecting, this could be a serious winner. The ticker is INDI, INDI Semiconductor. All right, so let's recap real quick because I've thrown a lot of information at you. We've got valens, semiconductor, and automotive connectivity with strong revenue growth and major design wins coming online in 2026. They're riding the wave of smarter, more connected vehicles, and they've pioneered a technology that's becoming an industry standard. We've got LAES, SEALSQ Corp, and post-quantum cybersecurity. This is super high risk because their revenue is declining and they're unprofitable, but potentially huge reward if their technology takes off and becomes the standard for next generation encryption. And we've got INDI Semiconductor in ADAS and autonomous driving with a massive $7 billion backlog and strong growth trajectory as these systems become mandatory in vehicles worldwide. Now let me be crystal clear about something, and I need you to really hear this. These are penny stocks. They are volatile, they are risky, and they are not for your retirement account. I'm not telling you to take your life savings and dump it into these stocks. These are speculative positions for traders who understand the risks and can afford to lose their investment. The semiconductor space is competitive. These companies are burning cash as they scale up, and there's no guarantee any of them will succeed. Revenue projections are just that. They're projections. Things can change fast in business. A major customer could pull out. A competitor could leapfrog their technology. Market conditions could shift. This is the reality of investing in small cap, high growth stocks. But here's why I think they're worth watching, and why I spent the time researching them for you. They're all positioned in high-growth niches within semiconductors. They're not trying to make generic chips that compete with everyone. They're specializing in specific applications where they can potentially dominate. They all have real products, not vaporware. They have real customers, actual companies buying their products. And they have real revenue, not just promises in PowerPoint presentations. They're not just pie-in-the-sky concepts or companies with nothing but a dream. These are operating businesses with technology that's being used right now. If you decide to take a position in any of these stocks, and again, this is your decision, not my recommendation, keep your position sizes small. Maybe 1 or 2% of your portfolio if you're aggressive, less if you're more conservative. Use stop losses to protect yourself from catastrophic losses. If a stock drops 10 or 15%, have a plan to cut your losses instead of holding and hoping. And never invest more than you can afford to lose completely. I mean, completely. If you can't afford to watch that money go to zero, don't invest it in penny stocks. That's just the reality of this space. So there you have it. 3 semiconductor penny stocks under $4 that could potentially make some serious moves in 2025 and beyond. Which one interests you the most? Are you intrigued by VLN's automotive connectivity play? Are you willing to take the high risk on LAES's post-quantum technology? Or does INDI's massive backlog in ADS get you excited? Drop a comment below and let me know. I read every single comment, and I love hearing what you guys think. If you found this valuable, if you learned something or discovered stocks you hadn't heard of before, smash that like button. It really helps the algorithms show this to more penny stock traders who are looking for opportunities like this. Subscribe if you haven't already, because I'm constantly hunting for these hidden opportunities. I'm digging through financial reports, I'm watching industry trends, I'm looking for those stocks that Wall Street analysts aren't covering yet but that have real potential, and I share everything I find with you. And hey, if you want me to dive deeper into any of these stocks, maybe do a full technical analysis or look at their financial statements in detail, let me know in the comments. Or if you have other penny stock sectors you want me to research, tell me. Maybe you want me to look at biotech penny stocks or renewable energy or crypto-related plays. I take your suggestions seriously, and they help me make content that you actually want to see. Remember, do your own research. Don't just take my word for it or anyone else's word for it. Look at the financial statements, read the earnings calls, understand the business model, and make your own informed decision. Invest responsibly, never chase stocks after they've already run up, and never risk more than you can afford to lose. I'll see you in the next video, where we'll be hunting for more opportunities together.